Hello, traders. This is Blake Morrow. You are listening to the Daily Roundup. Hold on one second. Okay, sorry. I just wanted to make sure everybody. Sometimes I hadn't been letting people in the chat room know that the webinar started, and then they end up missing it. So I wanted to make sure I let everybody know. Sorry, I was about earlier this morning. If you were listening to the Face webinar, my router went down, then my trade station went down. I had to restart everything, and then by the time I came back, Steve was there to take over, which was great because I had to put in all my trades, and you know, my systems are a little different than like a retail platform where I actually have to manually input stuff in and kind of go back and recheck and make sure I don't have any open orders, and there's different platforms that I've got to use for all that, so it becomes quite time consuming and then when the market's moving on top of that, it's not fun. So anyway, that's what I was doing earlier today as I was on the daily or as on the Face webinar. But we've seen some pretty good flurry of activity here, and I'm going to start off with well, first of all, I was buying the dollar Mexican peso earlier this morning when we were down here at the 2161 level, and that's this when it slumped right through my orders is where when my internet went down, of course, always happens that way. But the dollar Mexican peso, I have to say, is holding up pretty well despite the rally in risk. And if you look at the daily chart, we are actually at or near the 618 retracement. Well, let me just show you this. So, right, you got this fib 618 from where the surge started. It's not quite at the 618 from the bottom right here, but if you take it where the surge started, this is basically where we're at. Whenever I'm at a 618 retracement, I try to play that a counter trend bounce if I can, if it makes sense, and that's what I'm doing here with the dollar Mexican peso. Obviously, you don't want to take on a whole lot of risk here, but if you can get a little bit of a bounce and we can get back up to 22, it's not a bad risk reward down here. That's my initial thoughts. But let's take a look at the euro. The euro continues to blast higher. On the 1 hour chart last night in Asia, as we were hitting these highs right up here, or we were pushing 112, relative strength was very divergent at that point. I'm like, it's Asia. I don't want, I don't want the euro to get away from me. So I took some profits, and it continues to rally, and that's pretty stout coming into the European Central Bank meeting tomorrow morning. This move has surpassed what I thought it was going to do thus far. Can we go higher? Sure. The 127% extension of this sell-off here comes in at 112.54, so there's resistance there. Then you have the 78% retracement of the spike highs post-COVID lockdown, whatever. That 78% retracement comes in at 113 and change. Okay, so that's going to be, these are all going to be really big resistance going into tomorrow. And tomorrow, considering the fact that the euro is so bullish, what I'm trying to do is I'm trying to establish a foothold in a euro cross going into tomorrow. But what we need to see is a little bit of equity market selling in order to get some of these euro crosses to bounce or stabilize. So the euro Aussie, I guess it did bounce overnight, and I would argue that we put in a significant low last night. So as you can see, this dip back towards the 50% retracement held. The Euro New Zealand also held the 78% retracement. So my goal is going to be in one of these currency pairs. I've already bought a little bit of Euro New Zealand because this is the 200-day moving average right here. But my goal is to be in a profitable position going into tomorrow morning. So for example, if the Euro New Zealand can bounce back to, like, let's say 175.50, right? And I own it here at 174 and change, then if the ECB tomorrow, the decision is favorable for the euro, we could see the euro New Zealand rally, and then or the euro Aussie, if you want to play it that way. But the thing is putting yourself in a position where, based on the news, if it moves in your favor, you could really, parlay that into a much bigger trade. Or, if you've got 40, 50, 60 pips of profit, then you just move your stop to break even, and, then you just get out and go about your business. But giving your trade that opportunity is what I'm attempting to do here. So, and for those of you, some of you might be playing the euro pound, because the euro pound, continues to pivot off of this breakout point. That's another way to play it as well. I am a little bit more nervous about some of these commodity currencies because they've been so strong. I mean, you look at the Aussie and the Kiwi. I mean, yeah, the Aussie might have put in a pretty significant high overnight on that move towards 70, but you look at the Kiwi, we're at new trend highs right now, right? So, it's hard for me to get, super excited about the euro crosses when you have, the other currencies that are still moving, pretty much in lockstep higher with the euro at this point. Also, I should point out the dollar Canadian. I mean, it looked like we were going to round out this bottom here, and then we got slammed post Bank of Canada decision. Now, also keep in mind, as far as the dollar Canadian, we are getting close. There's the 200-day moving average. So if you look where we're at, okay, so the gap fill is basically right there. Your gap fill is 134. Let's just call it 134.20, right? The 200-day moving average comes in at 134.60. Okay, so this area should provide the dollar Canadian some support if we continue to drop. I'm not long, but if you're looking for a counter trend trade, maybe the dollar Canadian, if it drops, another 40 or 50 pips from current levels, or if you want to try to play that euro idea, you could let the dollar Canadian slump a little bit, maybe overnight in Europe. Look for like the euro Canadian. Let me pull up the euro Canadian here, and I haven't looked at it in a couple of days. So maybe you let this euro Canadian, slip back towards 151 if that happens. You know what I mean? If the dollar Canadian falls, slips back to 151, and then maybe look for a long down there. That's an idea of something to do if the dollar Canadian continues to slide. But anyway, that's what I'm thinking right now with those euro crosses ahead of the ECB tomorrow. There's a lot of talk on what the European Central Bank is going to do with the PEPP program, and let me just say this. We were talking with the guys in my office in Greenwich, that I trade for, and we were talking about, the more QE is not going to be for the euro. It's not going to be a euro negative. It's going to be a euro positive. Currencies they're acting better if their central banks are supporting them. So if expectations are met and exceeded for the ECB tomorrow, if the euro slumps, I think you got to use that as an opportunity to be a buyer. So let's say more, the ECB for all intents and purposes is going to be more looser than expected. The euro drops a quick 40 or 50 pips. You got to be there ready to buy it. That's how I'm going to be playing the euro tomorrow morning. Just, I could not stop yawning today. I have just been, and I actually slept my normal amount, not like a you know, it's crazy. I just can't stop yawning. Anyway, that means I probably need to go take a nap. All right, guys. Well, one last thing. Let's talk about the dollar yen. So the dollar yen continues to blast higher. I'm just hoping that we get a pullback. I need to add to my position here. I had a bunch of buy orders down here at 108.20 overnight. Matter of fact, I can go ahead and cancel that right now. I'm gonna, well, actually, you know what? I'm gonna pause it and adjust it later. So we are at the 50% retracement. I still think this is like channel resistance. Relative strength is a little divergent here. So what I'd like to see in the dollar yen is I would like to see a little bit of a pullback. If equities can pull back, which is, I know it's laughable to most of you guys. You guys are probably like, yeah, like that's never going to happen. But if equities do pull back a little bit, I think the dollar yen could be an opportunity to be a buyer here by the end of the week. Because this is another idea of the trade I want to do. Since this is an inverted head and shoulder pattern, what I'm hoping for is we get a little bit of pullback in risk and we get a little bit of pullback in the dollar yen. Then I can add, or we all can add to our positions on this inverted head and shoulder pattern ahead of Friday. Because what's Friday? Non-farm payroll. You saw the ADP numbers. Yes, they were bad, but they're better than expected. So if we get a good number, or I know it's going to be a bad number, but a better than expected number, maybe that's what, takes that dollar yen back, towards 110. So I'm looking for dips to be a buyer. Where, it's hard for me to exactly find out because I don't know if we've peaked yet. If we have peaked yet, then that means that a dip now down to 108.25 is a 38% retracement. So yes, if we can get a move like that, I think that would be phenomenal. Do I think that's asking a lot for this market right now with the way that the dollar yen is trading? The answer to that question is yes. I think the dollar yen is trading very, very solid right now. So a dip that deep down to 108.25 is probably, a little too aggressive. Maybe to the 24% retracement back down to the 108.50 might be a better place to establish longs. Like I said, I want to be long this going into Friday. So sorry again. I mean, I want to be long more. I don't want to be, a small position. I want to be more of an aggressive position because I took some profits yesterday. So anyway, that's it. All right, guys and gals. Oh, I got some questions really quick. Sorry. Nassim says TLT is down. There's a head and shoulder pattern. Let's see. I don't know if it's a head and shoulder pattern, but what I do think it is I do think, I mean, I guess you could look at it as a head and shoulder pattern. It was a bearish wedge. But I see what you're talking about because this would be the other, this would be the, right? Something like that. Shoulder, head, shoulder. Yeah, I mean, yeah. So what does that mean? Well, that means that yields are going to continue to go higher probably, right? So if you look at like the 10-year, the 10-year is going to show a breakdown of that triangle. There we go. So, yeah, I mean, it's breaking down. Didier asks your thoughts on the euro yen and euro New Zealand. I think you got my euro New Zealand thoughts. Let me go to euro yen. As far as the euro yen goes, 123 right here. I mean, that seems doable. Remember the conversation yesterday? I sure as hell wouldn't want to be short, but it looks bullish. So, just continues to rip higher. I guess you just got to look for dips back down towards below 122 as buying opportunities. It's hard because it just continues to surge higher with stocks. So, you got to chase this stuff or wait for very shallow dips. Ahmed says the euro Aussie, please. Yeah, let's let's take a real quick look at the Euro Aussie. Euro Aussie, you know, I know I showed you a little earlier, but look, that I think that was like a little capitulation move in the Euro Aussie. So I think it's going to be supported from here. If you go to the daily chart, this is the previous trend line that was following basically the channel that we were following ahead of this whole virus thing. So, you know, I think it's oversold. I think it can probably bounce here. Its bounces might only last to 165 or so, but still, I mean, that's, you know, it's, I think we're in an area where, and look, we plowed through the lows here. So anybody that had some lingering stops, they got stopped out, right? So, you know, I think from here, you should be looking for bounces, would be my opinion. Amadur says, have a look at the Aussie Canadian multiple fib levels on daily and weekly. Okay, last thing I'm going to look at. I'm going to go eat. I haven't eaten anything yet today. Yeah, it looks like a confluence here. So let's take a look. Well, first of all, 618, boom. Wow, that is, huh? 90, where are we at? 93.58, and it's been as high as 94 and change. Okay, let's take a look at the weekly. Hi, hello. Yeah, that's 50%. Yeah, I mean, a nice confluence right there at 94.20. So I think the way you could look at this is, you know, as long as we stay, you know, below, you know, I think any move back to 94 is a short. So if you can get a trade off, that might have been it. You know, if we can get, you know, move up to 93.80, be an opportunity to be on the short side. But yeah, it looks, personally, it looks like a great trade, you know, to be on the short side. As long as this doesn't break, you know, as long as 94.20 doesn't break. So I would just try to use an opportunity to sell into strength if you can get it. Question is, you know, and I'm not watching it super carefully, but that's what I would do. And yeah, we're overbought on the daily too. You can see it. I'm just looking relative strength wise. I mean, we're near, you know, peak overboughtness. So anyway, yeah, good look. All right, guys, I got to roll. I got to eat. I'm starving. If you guys haven't tried out ForexAnalytix, make sure you do so. For those of you that are listening to this as a recording. All right, guys and gals, have a great one. I'll talk to you soon. Thanks.